Hey, welcome, guys. It is Tuesday night, July 15th, in preparation for Wednesday, July 16th. Before we jump into the market analysis here, we are still in the progress of kind of going through the Market Wizards interview with top traders by Jack Swagger. We are on the, I believe, fourth section. Let me do it. Yep, fourth section, um, which is the view from the floor. These are prior floor traders that some of them moved off the floor eventually, but this is Brian Gelber, broker turned trader. Gelber's relaxed personality seemed almost out of place with his profession. Instead of the high level of intensity expected by someone who trades and supervises trading in multi-million dollars bond positions daily, I found a man who talks about his work as if he were describing a pleasant vacation. Um, Swagger asked him, "What books did you read?" He said, "I learned the most from the technical analysis of stock trends by Robert Edwards and John McGee." "What other books would you recommend to people?" He said, "The first book we have our traders read is Ed Laverne's account of Jesse Livermore, Reminiscence of a Stock Operator." He said, "I have read it at least a dozen times." Um, I ended up skipping over quite a bit in here because he was talking about stuff that I didn't feel was pertinent to us at this time. Swagger asks him, says, "Were you tempted to give up your floor brokerage so that you could concentrate on trading?" And Brian Gelber says, "Actually, it was just the opposite. I had started out as a customer's man. From 79 through 81, I built a massive customer base. We were a powerful force in the market at the time. Probably the saddest thing that I ever did was to become a trader too. I was a great broker in my 20s. And if I had parlayed that for 10 years, I probably would have ended up where I am now without enduring all the pain of trading. I considered trading to be an unrewarding, unglamorous game." Swagger says, "It's odd that you say that because you have been far more successful than most traders. I guess my point is that as a broker, I was at a higher echelon. I was really good at it and it suited my personality." "So why did you get into trading?" asked Swagger. "I started trading because some of my customers said, 'You know the market so well, why don't you just trade?' I resisted at first, but after 6 months of holding out, I started trading. From there, it just evolved." "Do you remember your first trades?" "My first trade was long position and I made some money. Then I put on a long bond slash short Ginnie Mae spread, which was almost like being long. The market went down and I lost all the money that I had made plus 50,000 more. Since I was making about 50,000 per month as a broker at that time, my attitude was that I basically broke even on the month. But I did not like the feeling at all. So I cut my position size down and started trading a little more actively. This happened during the bear market of 79, and the problem was that I was still bullish all the way down." "You really had no strategy, no plan, no system. You were just shooting from the hip," says Swagger. "That's right. Then over time, I started to get a grip on how to make money. As opposed to saying, 'I have an opinion and I want to express it in the market,' I started asking, 'How do I make money out of all of this?' So instead of us trying to express our opinions in the market, we need to keep asking ourselves, how do we make money out of the market? It doesn't matter what our opinion is." "What had you learned by that point?" "I had learned that an opinion is not worth that much. It is more important to listen to the market because I became a reactive tape trader as opposed to an opinionated trader." "Where were your successes coming from?" asked Swagger. Brian Gelber says, "I learned how to read the tape and develop good instincts. We were such big players in the bonds back then, we, meaning my customers and myself, that the spot that we picked to trade could virtually stop the market. We were actually creating some of the support and resistance points. It did not take that much to do it back then. I think there was a streak of months when I hardly had any losing days." "Was your trading success a matter of being able to read the tape?" He says, "Yes, I was attentive and had good instincts." He said something earlier. He says, "That sounds like a cliche. What do you mean by knowing yourself?" Um, yeah, you got to know yourself. He said, "I'll give you an example. I think I'm a good trader, but there is a guy working for me who is better. I could go out there and beat my head against the desk and try to outdo him, or I can just be myself. Let him make whatever he can, and I will make whatever I can. Um, oh, this is my view of a year in the life of a trader. 4 out of 12 months, you are hot. You are so excited that you can't sleep at night. You can't wait to get to work the next day. You're just rolling. 2 months out of the year, you are cold. You are so cold, you are miserable. You can't sleep at night. You can't figure out where your next trade is going to come from. The other 6 months out of the year, you make and lose, make and lose. You can't sleep because you're trying to figure out how you are going to make some money. The net result is that you never sleep because you are constantly thinking too much about trading. It is an all-consuming thing. That is why you need to know yourself, to moderate your own emotions. If you don't, then after a big success, you're high as a kite. You're not prepared when just around the corner, the market suddenly brings you back to earth. Or in the opposite situation, when you are consistently losing, you might end up jumping out of a window. Why did you leave the floor? Again, because I know myself. I need to interact with people, and that doesn't happen there. Let's see. Yep. Oh, what other things are important to your trading success? Asked Swagger. The realization that when you don't care, you do well. When you try too hard, you don't do well. By trying too hard, do you mean pressing when there is no trade? Brian Gelber says, pressing is one of the reasons I'm sitting here with you for so long during trading hours today. The markets have not traded well in weeks, and we are proud of ourselves for not having thrown a lot of money away. Schwager asks him, says, you mentioned that your first year off the floor was very difficult. Was the main problem that you were still trying to trade the market as you did on the floor? He said, yes, that was the number one reason. The second reason was that the transition occurred during the 1986 runaway bull market. I was bound to lose because my style was not based on following trends. Is that still true? Asked Swagger. No, it has changed. I have gotten better. I can still counter trend trade really well, but I found that you can also make a lot of money trend following. Do you use trading systems? No, we are discretionary traders. We only use technical indicators and systems as trading tools. One particularly interesting system we have developed is based on quirks related to volatility. Our belief is that volatility offers clues to trend direction. Although we found through backtesting that this system gives you good signals, we do not blindly follow the trends. Do you think that any system can compete with a good trader? He said, I have not seen one yet, although there may be one somewhere. I know Linda said the same thing. It's hard to have a system beat a good trader because discretionary trading is necessary to beat, will always beat the systems. There are some traders who have the skills and who do not succeed. What is it that keeps them from becoming successful? Brian Gelber answers. Most traders who fail have large egos and cannot admit that they are wrong. Even those who are willing to admit that they are wrong early in their career cannot admit it later on. Also, some traders fail because they are too worried about losing. I think that's where I stopped here for today. Yep, actually, we'll finish that up tomorrow. There's quite a bit that I skipped over, but we will continue that tomorrow. Jump into the market analysis here. On the daily here, wanted to say that we still have not closed outside this box range where we closed here, on the 3 bar. This is the lower end of the 3 bar, the upper end of the 3 bar. We closed up in here, closed up, closed here, and we've not closed outside of this range as of yet. The 2-period rate of change. This is interesting. Down here on our 2-period rate of change, we went from yesterday, or no, on the 11th. That was 11th, 14th, and then today is 50th. So the 11th, we were at negative 0.19. On Monday, we were negative 0.19 on that move up. Today, we moved down to negative 32. So not a whole lot of movement in that. Like you can see these, bigger movements in the 2-period rate of change. Right now, we're not getting a whole lot of movement. So this thing could break either hard down or hard up on that 2-period rate of change. So I'm kind of keeping my eye on that. I did think this was interesting here. Let me pull this. So I'm going to pull my 3-bar upper and lower. You can see that we're basically holding that 61.8 or 38.2. If I inverse it, 61.8 um, of this 3-bar. So right now we're still holding above that. This is not a significant use of the Fibonacci's or the Dustin numbers, but I did think it's interesting that we're kind of holding within about the 65% retracement of that 3-bar as of right now. So keep an eye on that. If we bounce off that and we're making a move back up tomorrow, let's be attuned to that. If we're breaking below that, then we want to be attuned to that as well. Um, let's see, the 65,000 tick chart. Wanted to pull that over to show. So on the nope, that's 60-minute. Let's go to 65,000. Yeah, 65,000 again. These horizontal lines were the same ones I had on that daily chart. We're holding that box range for now. We have the heavy price overlap just below us here, where we had a lot of price overlap here. So we're going to see if that holds. Like I said, if we bounce off this lower channel and move back up, or start failing and start breaking down through that. On the 60-minute, I did want to pull this. If you remember from a couple or last week sometime, let's see, this was back on the 3rd. I guess it was around the 3rd or 4th. Yeah, so it had been last Monday or Sunday night's tape when we went over this. I said, watch to see if we get a second Keltner channel reversal or if this one starts to play out. So we had this, again, this is on the 60-minute. I'm going to zoom in here. So this is where we're closing outside the upper Keltner channel, and then we close back below it, close outside of it here, close back below it here. So we did close below it. Yes, we touched that 20-period moving average. Then we came back down. We moved up outside the upper Keltner channel again, closed back below it again here, only to have us move back up, kind of find a little bit of support there, move back up. Then this morning at 9 o'clock, or 10 o'clock hour, so we were closing up outside, or pushing up. I guess we weren't closing up. We closed outside of it here. We were pushing up to that upper Keltner channel. Then we reversed here at this 10 o'clock again. Will this be the one that helps push us down on our daily to get back down to where we want to be on the daily? Let's look at the SPY here on the daily chart. So here's the bottom of the 3-bar, top of the 3-bar. We're still within that. We had a nice wide range 7 day to day. This 20-period moving average is moving up above. If you recall, this level here is the prior all-time highs in the SPY. We kind of did this little reversal. Are we going to continue to hold this pocket here, or are we going to break down and come down to the 20-period moving average and have that Keltner channel play out, Keltner channel reversal play out? That's kind of where I'm looking at. I'm thinking we'll have that further push down to that 20-period moving average. But as I showed you, I want to be conscious that if we're holding that box range, not really closing below it, holding this pocket, could we get another bounce up? I don't know, but like I said, I'm putting my cards on the table thinking the short direction. But I want to be open to listen to what the market tells me and not get too opinionated, because on the daily, we're still in this bullish pattern on the LBR 310. That same thing is still showing up on the ES, where we have not broken down below it. We're starting to come back down below it again on the slow line. I'm sorry, the fast line on both of those. Starting to get a little turnover in the slow line on the ES. So we'll keep an eye on that. Nothing else really to go over today, guys. I wanted to thank you guys for supporting, and let's continue supporting one another in what we're seeing in the markets. Continue to push each other to be better, to recognize those positions, to as we were talking about. If you see that time to jump on, and push ourselves. Make ourselves feel a little uncomfortable when the situation mandates it. All right, guys, happy trading. We will follow up tomorrow. Thanks.